Joining me now, brave man after a really rough day. First on Fox Business, he's standing tall, Synopsys CEO Sassine Ghazi. Sassine, thank you for coming on to speak to investors. Let's talk a little bit about the issue of what you say has brought down the company in the most recent quarter, and that would be the chip export restrictions that the Trump administration had put into effect earlier this year. Where do those stand from your perspective right now?
So first of all, Liz, thank you for having me to tell our story, because the overreaction yesterday was honestly shocking, given our strong market position in our portfolio. As far as the restrictions that hit us in the middle of our Q3 and lasted about 6 weeks, we're used to them. And the reason we're used to them, over the last 5-6 years, we have been receiving on an ongoing basis either a technology restriction in the way we sell to China, or export control restrictions on some customers. And we have protected the company with good guardrails on how to snap and obey and follow the guardrails or the rules that come in place.
Are you saying that the current quarter is going to be better?
Well, what we said yesterday is we're going to continue on de-risking China. What we said at the beginning of the year, the environment in China and the headwinds will persist throughout the rest of the fiscal year and into next year. But the resiliency of the rest of our business is so strong, and we're continuing on growing the business outside of China and in various different markets. So the performance of the business, despite the decline in China, we're confident about the long-term performance.
Okay, let's talk about your potential to fill the gaping hole that was just seen in the most recent report of the quarter. There's also a concern about Intel. Intel's foundry business was one of your big customers, correct? So where does that work into the picture going forward?
Yeah, Liz, if I may zoom out a little bit, we have 3 parts of the portfolio. We have something called design automation, which is software that is essential for designing any chip. And pretty much any chip designer, they use our software for design automation. That's roughly about 50% of our business. Then we have about 30% of our business, which is essential for the future of physical AI. That's the acquisition we made, which is the Ansys acquisition, roughly 30% of the business. Then 20% of the business is IP, which is essential building blocks for chip design. So a company like Intel or any other foundry, we are the on-ramp to the success of these foundries. They need our IP and EDA.
Well, can I jump in and ask you, the government has taken a 10% stake in Intel. Do you see that as a positive for your company?
It is a positive, because it's important for the U.S. government and the U.S. companies to have the most advanced technology, for companies like the AMD, the NVIDIAs, et cetera, to have optionality to manufacture onshore in the U.S. with technology today that is available through Intel. And we're a strong believer, by the way, that Intel does have the technology and the resources to be successful. And as Intel is successful, we are successful with them.
We have heard from OpenAI Sam Altman recently, who apparently said in a conversation that he thought AI was in a bubble. However, you just referenced AMD. Yesterday, Lisa Su, the chairman and CEO of AMD, was on the show, and I got to tell you, she struck a totally different tone. Here's what she said, and I'll let you react.
Compute is now the way we unlock intelligence for businesses. And from that standpoint, everybody wants more compute. We want to invest more. So I don't think there's anything that we would say is a bubble. I would actually say we see accelerating demand for AI. And this is an opportunity for partnership, which is so critical, because there's no one company that can do it all.
Is it fair to say that you agree with that you see accelerating demand?
Absolutely. We are in such an early phase with AI. Today, the way we use AI, we use it as a helper. In the future, is going to become a doer, meaning agents are performing certain tasks. We're just at the beginning phase of AI and the possibility of impact that AI can deliver.
All right. So let's talk about the concerns that you have when it comes to anything you see on behalf of the data center world. It just appears, especially considering we saw OpenAI yesterday, and this is not a concern. I mean, it looks like a real land grab. $300 billion deal with Oracle. There are multi-$100 billion deals swirling around. The Middle East is diving into the data center opportunity. Are you getting any of that business? I'm just trying to give investors and potential investors a window into, if you de-risk China, who's going to fill the void?
But that's exactly where our opportunity is at. If you go back to Synopsys, say 6-7 years ago, before that wave of AI infrastructure build out, the company was growing a single digit. Over the last 5 years, we've been growing in the mid-teens. And what's driving that growth is the essentialness of the semiconductor chips in order to build these data centers. When you envision the future of AI going to become a physical AI, robotics, industrial, etc., you need the silicon to be optimized all the way up the stack with the application, the software, the AI. And that's a huge opportunity for Synopsys because we are essential at the semiconductor level. With the Ansys acquisition, we're delivering the engineering solution all the way up the stack to the system level. So it's a super exciting opportunity for us, for the industry, and of course, for our customers.
You know, President Trump has made it very clear he wants technology companies to move their operations back to the United States. Typically, software companies, I know, you operate in the United States, but are you looking at possibilities of hiring more in the United States or doing more on the ground here in America?
We have a significant presence here in the United States. We're a global company, but not only our headquarters is based in the US, significant part of our customers, more than 50% of our revenue comes from companies here in the United States that we have to be intimate and very close to them in order to accelerate that innovation. And a couple of the things that our current administration are doing that we're participating in, which is the acknowledgement of AI as an essential future technology. And it starts with education. We're making significant investment along with the White House initiative on AI education, how to provide curriculum to middle school, high school, colleges, and how to expand and building that AI vertical stack here locally and leading with it while exporting the technology to the outside world. As you heard from my peer CEOs often, it's important for US companies to have access globally while continue on investing and innovating locally and race forward.
Well, I think that's a very smart move. It starts at the foundation. That would be education here in the United States. Sassine, it's great to have you. And you don't plan on moving out of California like OpenAI might, at least some reports said.
No, we're here. We're staying in California.
That's right. That's my home state. Sassine, good to see you.
I know it is.
Thank you very much.
Thank you, Liz.
Sassine Ghazi.
Bye.